Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities, PCG Research. The Fed raised rates by 75 bips as expected and forecast its benchmark would reach 4.6% in 2023, stepping up its fight against surging prices. Mr. Powell admitted the chances of a soft landing are diminished, said the housing market might have to correct, and added there is no painless way to get inflation down. No one knows if it will lead to recession, he said, and also the dot plot showed a 10 to 9 majority in favor of hiking above 4.25% this year, suggesting another 75 bips increase in November. It is certainly not positive for emerging markets, as we may see the dollar index to move higher. It was around $111, which is highest of last several months and years. So there the real problem is, and also the 10-year bond yield is now trading very close to 3.50%. Crude was at its previous levels of 91, 92, but broadly we need to see that how our currency plays or trade in today's date. Also, if we go through with Asian markets, then they are trading lower, but Singapore Nifty is down nearly 120, 150 points. If we see the overall performance of the market, then our markets are more resilient, but today's day is quite crucial, and we need to see that after opening lower, whether the market sustains above the mark of 17,600 or not. Below 17,600, the market may fall to the levels of 17,550 or 450, where the market is having major support zone, but it should not break the level of 17,400, which is the crucial support for the market, and below that the market may again slip to the levels of 17,166, which it has made in the current up move. So it was the crucial support level for the market, and it should not break that. And in any case, on the higher side, if we see the market is sustaining above the mark of 17,600, then the chances of hitting 17,750 or 17,800 would turn bright. In case if we see the markets are closing above the mark of 17,750, then we are going to see furthermore upward activity in the market. For the bank Nifty, there also we are expecting range bound activity, and 41,000, 40,800, 40,700 would act as major support zone for the bank Nifty. Below 40,700, it may fall to the levels of 40,200 or 300 levels. On the higher side, the important level is 41,500. For the day, we are again going to focus on financials, as well as we need to focus on auto companies. Along with these two sectors, yesterday we saw some activity in FMCG companies, and broadly we are expecting furthermore activity in pharma companies. So the markets are turning more defensive. For the IT, again, after opening lower, whether they are sustaining, whether they are recovering or not, on that the overall mood will depend. But for the time being, with a very short term view, it is advisable to stay away from taking any short term trade on the IT companies. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me, and have a great day to all of you.